I'm Matt Bishar with NAREIT.com here at the Wynn Las Vegas for REITWorld 2015, NAREIT's annual convention for all things REIT. Joining me for this CEO Spotlight is John Thomas, CEO of Physicians Realty Trust. John, thanks so much for joining us.
Thanks for having me, Matt.
So it was quite the third quarter for the company. You had your largest volume of acquisitions to date. Do you expect that type of pace to continue, and what's driving it?
You know, we think that pace could continue. It really depends, for the most part, on the capital markets, but the access, the opportunities that are out there. We just hired a guy named Deeni Taylor, who came from another REIT, but in the healthcare space. Who really kind of brings additional relationships and opportunities to us. So we think that pace could continue, but it depends on the capital markets and the fuel to do that.
Now, looking at your portfolio geographically, where do you see the strongest pockets of growth likely to come from?
You know, I mean, it's in healthcare, so a lot of it tends to be the smiley face of the United States. We're not invested in California yet, which healthcare economics and real estate economics are tough to match up in that state, in that environment. But we just made a major investment in Phoenix. We think we have more opportunities in Phoenix. We continue to grow in Columbus, Ohio, which is a fast-growing, great market, and in Minneapolis. So again, outside the smiley face, but Minneapolis tends to be a very strong healthcare market and good opportunity for us.
And lastly, the company also just received its first investment grade rating. How does that impact your access to the capital markets, and what's that mean going forward?
Yeah, so it's very important for us. When we started the company, it was for a long term. We're trying to build a long-term organization, and getting to investment grade as quickly as we could to really transition our balance sheet from a very short-term funded, very short-term access to debt market balance sheet to a long-term balance sheet. And so now we've got the opportunity to term out some debt in an unsecured basis at a very low cost of capital. So it certainly improves our cost of capital, but more importantly, transitions us into a long-term organization and just, again, continue to fuel that growth for the future.
Great. John, thank you so much for joining us.
Thanks for having me, Matt. Appreciate it.
For more from REITWorld 2015, be sure to visit REIT.com.